The Nigerian National Petroleum Corporation, NNPC Limited, has again increased the pump price of petrol. In Abuja, the price has jumped from 897 naira to 1,030 naira per litre, while in Lagos, it's now 998 naira, up from 885 naira per litre. This marks the second price hike between September and October.
The price increase follows unconfirmed reports of NNPC's withdrawal as an intermediary in the Dangote Refinery purchase deal. The increase in fuel price has been progressive following the phasing out of fuel subsidy, with the government still unable to control the issue of petrol supply to marketers and filling stations. Joining us is International Energy Adviser, Strategy and Policy, and Director, Desitin Energy, Desmond Agboifo. Good morning, and thank you for joining us.
Good morning. Thank you for having me this morning. Thank you.
All right. Can we say that we can authoritatively confirm NNPC's withdrawal as the withdrawal from being the intermediary between Dangote, the Dangote Refinery purchase deal? Because if you check on their page, so far, I don't think that we've seen any statement to either confirm or deny that.
Well, thank you very much. To be very honest, there's no particular statement, but I think what we have as a closest report coming from the NNPC, I mean, that was published sometime, I think, last month. That that's the deal which is going to trigger the NNPC's uptake on the PMS will kick off 1st of October, and very, very clearly, I think it was communicated by the communications officer, having to state very clearly that the NNPC's estimated pump price is will be just around 950, and of course there's a breakdown on that number. I think it was quite clear. Prices will range anything from 960 to 1,019 naira. But what is key in that report that was released by the NNPC was stating its base pricing model coming from the Dangote Refinery's PMS gantry pricing at 898 naira, prior to the pricing of the authorities and inspection fees to come to 950. So there has not been any particular statement from NNPC, but that's the best we see at the time. And of course, just recently we saw the price hike just about 30 or 40% more than what it used to be in the conventional market space.
Yeah, all right. Let's quickly just talk about the, well, let's say false narrative that was sold about the Naira for crude agreement that was meant to start in the month of October. And the narrative that once that kicks off, there's a possibility that the price of petrol will reduce. So the general picture now is that the emergence and the start of the Dangote Refinery, the Naira for crude agreement, none of that has affected the price of petrol in a way that favors Nigerians. So quickly share your thoughts on that one, and was this all a lie?
To be very candid, I don't expect the price to come as low as the market just demand, because already if you go down to the fundamentals of why the price is already what it is, we see that there's already pushback in terms of the issues around the Dangote Refinery and the pricing of its PMS. And as you would expect, with the volume of our demand daily in Nigeria compared to pricing of these products, the pricing model will definitely not go slow as we'll expect it to be. In fact, there are different school of thought that has made it very clear that, well, the price will stay anything between 800 naira if we have our FX fluctuations a bit stable. But what drives this product is really access to this FX in terms of trying to assess the crude and then refine. There's a bottom-up calculation that every company should see. I mean, the policy made it very clear that prices should be published in the just on the website, and for people to understand what prices is applicable. But what we see in recent report again, it's anything between 890. It's feasible because the Platts price of refined products on 13th of September, Platts is standard of reporting, came about 840 naira. So to your question, I don't see that coming down. Number one, and number two, The confirmation that, well, because we have Dangote now, the price will go down. That's not a way to assess the situation clearly. But if I put them advisory clearly, all of this will be solved by our fundamentals. We would need to go back to the drawing board and get our refineries working. And then we'll now be able to ensure that this issue around trying to get crude for the Naira in 1st of October will be issues that should be borne by the national companies so that we can be able to ensure that we have the supply readily available within our 445,000 barrels per day refinery capacity in the country.
Getting our refineries working, what impact will it really make? We've been hearing and speaking about getting the refineries up and working for how many years now, and we're still doesn't seem like we're anywhere close to having, all that working. And there are those who would say that our refineries might not be able to in any way impact lower prices, because that's what Nigerians want. They don't want to hear all these stories and all this rhetoric. They just want to see the practicality of lower prices, because the higher the prices, the higher the cost of living. So what really is the importance, first, of the refineries working, and then the practicality of it, seeing as Port Harcourt, case in point, has missed its 7th deadline?
Great, thank you. I'll start with the impacts. On a very high level, using an error of correction mechanism approach, there was a study that is published. I think one of these international organizations made it very clear that an increase in PMS in Nigeria will have a negative impact in the Nigerian economy. In fact, it will impact our GDP. Just to put it very nicely, 1% increment in PMS price, just a mere 1%, would lag our GDP by 0.7% in real terms. So this is on a general scale. However, looking at the issues in specific within the Nigerian economy, every PMS price, because everything seems to flow with the price of commodities and price of purchase of these products. We'll see an impact in the economy, increase in foodstuffs, increase in transportation, even increase in access to very basic amenities. And what is essential is to be able to get this sorted out, we will need to get our fundamentals right. And the Nigerian NNPC needs to come to terms with the reality and ensure that we have products available. And I think two things must be mentioned here very clearly, which is the price availability and product stability. The product stability might help us to ensure that we have products available for refining. To your second question around NNPC having its own impact on the overall Dangote's refining capacity in terms of the supply. Well, those were very long conversations that came out in public. In fact, Dangote came out and said, well, the NNPC now has about 7%, as opposed to the planned 20% in exchange of about 300,000 barrels of oil deal. I would have expected that to be fantastic opportunity for us to be able to get into this business much, because again, to your point around our capacity of 445,000 barrels refinery as a national capacity, which is really less than what Dangote is producing. The reports from, I think it's from KPMG and Ernst & Young, that says we are probably, as of then, we're doing about less than 15% capacity utilization. So the point is really our refineries are not able to deliver what you need in terms of these products refining. And then unfortunately we need to look for a way out to get products out of the country and then bring it back again on the cost. So popularly, before we go to this to where we are, it's always good to go back to what has been the issue. At the era of the 650 naira and so on, we're having naira fluctuate around 350 to about 400. Now it's probably 3 times the value. So the key elephant in the room is really the cost of importation of refined fuel in the country, and that is impacting a lot of businesses and also impacting supply reliability of this product.
Yeah, but I think another thing to quickly mention is the value of the naira. Of course, how it exchanges to the dollar. That's another very key deciding factor. And if the naira continues to lose value, would expect that the pump price of petrol will continue to increase. Is that factual?
Absolutely. You see, again, back to the fundamentals. When the naira is devalued in the markets, what it means is that the access to purchasing the import products, it will have a knock-on effect on the Nigerian people trying to access the same product that will produce in the country, but refined out and come back in the country. So that issue alone covers just around 30% of the price. There are certain concepts that I've worked on, and clearly the cost of bringing this product back to the country covers around 30% of the actual price we get as the final price. So imagine if you knock off the 30% out of the price today. I mean, you see an impact in the economy. You see activities picking up as it should. I mean, we don't expect it to go as low as the days of 300 naira or 200 naira, but I mean, we'll probably see at least a much more tempered down tension in the economy.
All right. Let's also bring in Dangote elements to this. I've seen reactions on social media, and people seem to, in a way, be making Dangote to be the bad person, or the villain in this whole story. What's the role of Dangote in all of this?
Okay, well, thank you. I would consider Mr. Dangote as a hero in this situation. You see, as much as we were able to push our capacity into the markets, he has taken a bold step to drive this huge project, 650,000 barrels of oil per the capacity. And as much as it has been a big investment, the goal was to be able to access crude from the Nigerian market, refine and serve the market in Nigeria. You see, the numbers speak for themselves. If you look at the capacity of Nigeria, it's 445. Dangote is 650. If you look at the products that he's refining, it's well suited for the market. The key issue he has in here is the access to the crude that Nigeria would need to refine and keep the price down. I don't expect the price to go as low as what it should be. To be honest, this funding from Dangote is actually a business. I mean, it's a business fund, and of course, putting the $19 billion capital cost in a refinery, I would expect some level of time to recover investment costs and things like that. But that was the time, I mean, that the Nigerian economy should be able to assist and support with the product availability. I mean, it's a good effort. I mean, there are even concerns from the NLC that the price will come down, yes. And I've seen recently that the aviation industry are looking to purchase their products from him directly, at least to be able to get what is often termed as product stability in their supply. Those are the green areas that we can give to the whole Dangote deal. But with respect to the supply of the products and pricing, I think I would advise that the parties and stakeholders should come to the table and get a working deal for product stability and supply, so that we can be able to ensure that we have a guaranteed supply for the Nigerian people.
And is there a possibility that we're going to have guaranteed supply anytime soon? The next few months, do you have an idea what the next few months might look like, especially because the routine in Nigeria, as we've seen in the past few years, is that towards the end of the year, during the festivities, we start to see that there's product, there's a lack of supply of product. We start to see an increase in the fuel queues. With what we're currently seeing, this has been the norm all through the year. So are there concerns? Should we be concerned about what the end of the year will look like in Nigeria?
Well, absolutely. I mean, of course, we must always take a step back to understand what has happened in the past few years in terms of supply as we get to the total end of the last few months of the year. But just recently, I think it was 2 days ago, it was on the news that there was a 400,000 barrels supply that is now a discussion topic for the Dangote Refinery. A few months ago, it was a million barrels or so into his refinery, and we should expect, a much more regular supply from the Nigerian economy into Dangote Refinery. Positively, this is speaking positively. If that happens, then we'll be assured that, first of all, I mean, there are two issues to solve here. The first most crucial issue, which is the priority, is the product has to be available. Then, before we now come to terms to making the price to be stable. These two issues are, I mean, the first is to ensure that it's available at a price that, fortunately, it's an issue that we'll have to experience some very, very short-term pains to enjoy a long-term gain. So yes, we will expect product to be available, but the question is, what is the frequency of the supply. 400,000 barrels, it's just more than just about maybe just above 50% of what he needs for his refining capacity. And I'm sure that there was a minimum capacity requirement that he needs to run his refineries. Other than that, on the flip side of that, he will purchase the products, at an expensive rate. For example, discussion around Dangote looking to assess his crude from the WTI, US, that will come at a premium. And where we know that Nigerian crude is sweet, less sulfur, we would expect these things to be easier accessible in country for all the gains it's worth, exactly, because certain products out of the country will definitely push them in knock-on price on the final price in the market.
Yeah. Final question from me. I think everyone, really has just accepted that this is, going to be the new reality. Nothing is likely to change. The conversation about Nigeria's refineries are, tiring at this point. I think everyone should just let go of that. It's very likely to never come back to be fully functional. There are government promises, just like Ajaokuta Steel, that they make every administration. So let's forget about it.
Yeah.
But my question is, what would you have done differently if you came into office with this government as, someone in the petroleum sector? What would you have done differently in 2023, or maybe even earlier, that maybe would have mitigated against what our current realities are?
Great. Well, what I would have done differently, hopefully if I get to the system, it's first of all is to go down to the fundamentals. We've heard stories around that we've been trying to do what's called TAM, turnaround maintenance of the refineries, by Technimot and the likes of them. The first assignment is to ensure that we have a working refinery. There is no point Nigeria. Everywhere in the world. I should also say this. There's a recent video from Dangote saying that there are only 2 countries in Africa that don't depend on imported products. That's a huge gap that needs to be addressed. Nigeria is probably one of the biggest oil businesses in Africa. So one of the first work to do is to ensure that we get our assets in a capacity to at least refine what the Nigerian market needs. That's the first point of call. When we can do that, that would also involve us working with the private sector, working with the likes of Dangote, and even having us fix our own Morgan refinery for a while. That's a key issue. If that is done, then we might have to go back to the drawing board and ensure that we have new projects coming up. There's some point for there are lots of marginal refineries around the country right now trying to pick up. But the issues around these refineries, and even one in Edo State, it's product availability. So again, there must be that synergy of those refineries where it's the small scale or the refineries that just take up very, very little products. We ensure that there's a synergy within the government to ensure that these refineries has capacity to refine products should be available for them. And then long term, I'd say we should get the country to build a working refinery from scratch. This is going to be a tall order. A couple of billions will be spent, but this is something that should be done as a long-term approach. But short and medium term, let's fix refineries, support those who has refineries, who has even modern refineries. Let's get something working so that we can be able to ensure that we have product that is available. If it's available, I'm sure the tensions around the pricing will temper down. That's my take.
All right, Desmond Agboifo, thank you for your time with us this morning.